Joining us now, Peter Schiff, the CEO of Euro Pacific Capital. Peter, it's always good to have you here on America's Forum as you join us this morning from Connecticut. What is your take? Will the euro continue to weaken in the weeks and months ahead?
Well, I think ultimately euro weakness is going to be replaced by dollar weakness. Everybody is convinced that Europe is going to pursue this QE policy, and I don't think it's going to be nearly as large a program as people are hoping for. Meanwhile, I think the U.S. is going to surprise everybody when it launches QE4. Because I think we have a much weaker economy than is generally perceived. And, the reason that Europe is supposedly going to be launching QE is because they claim inflation is too low in Europe. And that's just nonsense. Inflation can never be too low. The lower, the better. But what they are going to get with more QE is not more economic growth, but higher inflation. And I think that's going to be a detriment to economic growth and ultimately cause Europe to back off on QE.
Okay, so Peter, let me get this straight. Deflation is never an economic threat under any circumstance?
Well, first of all, we're not even talking about falling prices. We're talking about prices not rising, right? Europe has rising prices. They're claiming they're not rising fast enough, and that's nonsense because lower prices are a benefit to an economy. Look, everybody is talking about the benefit of lower oil prices on the consumer and on economic growth. So, why are falling oil prices a good thing if deflation supposedly is bad? I mean, this is all a myth. There is nothing wrong with falling consumer prices. We want falling consumer prices. That means that our money is more valuable. That means that we can buy more stuff. We can have a higher standard of living. This is all a smokescreen. What governments are really concerned about is repudiating their debt. You have governments that have a lot of debt. They can't possibly pay it back, and so they want to inflate it away. But the pretense is that, well, we need inflation for economic growth, when that's complete nonsense.
One thing for sure, Peter, modern Greece is not ancient Greece, not by a long shot. The actions taking place, the new government and the potential for change in Greece, or at least unrest like we saw, about 18 months ago, will Greece add problems for the entire continent of Europe?
Well, if Greece ends up leaving the Eurozone and they re-embrace the drachma, if they do it with the mentality of more government, right, as opposed to making Greece a limited government tax haven, which is probably not likely. So if they end up as a big government Greece with the drachma, the Greek economy will implode to such a degree that it will be an example not to follow. And that might actually strengthen the euro because the countries that remain might be incentivized to make the reforms that Greece refused to make. Because Greece with the drachma is likely to be a much worse place than Greece with the euro.
Sobering forecast there. Just one final note, 30 seconds remaining. Gold is up about 10% in the past month. Will that higher price have an impact on the euro?
Well, I think gold prices are going up in all currencies. I was noticing today in the Canadian dollar, the gold price rose about 1,550 Canadian dollars an ounce. We're less than 15% from an all-time record high in the Canadian price of gold. Gold has been exploding upward in all currencies. It's moving more slowly against the dollar, but I think the trajectory of gold's rise is going to increase in the coming months. And I think this really shows you that it's never been about dollar strength. That's not the real story. It's just been about euro or yen weakness. But I think that when the U.S. ultimately has to come to terms with the fact that we're decelerating and heading
unfortunately,
to recession,
we got to come to terms with the clock, Peter. We'll have you back. Thanks for your time. America's Forum coming back.